The content here is for informational purpose only and should not be taken as legal, business, or tax advice or be used to evaluate any investment of security and is not directed at any investor or potential investor in any Alphaswap podcasts.
Hello and welcome everyone. I'm Khing and this is the Alphaswap podcast. Every week we'll be discussing a top investment idea from the platform and have an in-depth conversation with the user who posted the idea. You can learn more and join our community at alphaswap.io. This week, instead of covering a trade idea from the platform, we'll be discussing a trending topic in the markets. We're doing this based on a room that we host in Clubhouse every week. So if you're in Clubhouse and you'd like to be kept up to date, please follow us. A couple of weeks ago, we discussed Greensill, which is a UK financing company, which is a very interesting special situation and a developing story. I'm hosting this room and the podcast together with Bert. Briefly on myself, before founding Alphaswap, I was in the hedge fund industry for many years and ran my own fund. Bert?
Hi, everyone. Well, thanks for tuning in. My name is Albertus Rigter. I'm in the investment team of a hedge fund specialized in credit, alternative credit strategies. I'm also an advisor to Alphaswap. The story that's been breaking this week and the week prior is really close to my heart because it involves credit strategies, supply chain financing. I'm sure that most of you have actually read about Greensill. For those of you who have not, they have a bank in Germany that was sort of halted by BaFin, who is the German regulator. At the same time, in the UK, Greensill Capital filed for insolvency. Parallel to that, there were 10 billion worth of Credit Suisse funds that halted redemptions. Those funds were invested in deals of Greensill. That's obviously a big number. GAM, another asset manager, holded a smaller amount of funds, a little under $1 billion. So a lot has happened, many different players, and there's a lot to this story. So what we're going to try to do is package in different sort of categories and try to explain what is our view on the situation. At the same time, I want to be careful because it's a developing story. So more news will come out over the next few weeks, and I don't think we've seen the end of this. So maybe just as one starting point, these Credit Suisse funds and the GAM fund and what actually Greensill is doing is supply chain financing. It sounds a little bit like factoring, but it's not quite the same. Khing, would you mind walking us quickly through what is supply chain financing?
Sure. I mean, factoring is something that most people will have heard of, and effectively it's a way for a company to optimize its working capital. When a company has receivables, so it's money owed by its customers, that may take 60, sometimes even 90 days to come through, and it will go to a factoring company to get money back at a slight discount, but sooner. And that time is important, so that's valuable, and that happens a lot. The other way is when a company has its suppliers to pay, and that supplier in turn is waiting for its payment that may be waiting 60 days, 90 days, maybe even longer. What a supply chain financing company does, or reverse factoring, which is the same thing, it actually says it agrees to pay that invoice to the supplier. It will pay the supplier sooner than it would have been paid by the company otherwise. So the supplier is happy and it will take a small discount for it. And in turn, the company which owes this money to the supplier now owes money to this supply chain finance company in the middle. In this case, a Greensill. And what it does, and Greensill will allow the company to pay a bit later than it would normally pay. So everybody's happy, you would argue. What is a slight problem with this is that on the balance sheet, this payable that the company has to Greensill, which is effectively a debt, is stuck in the other payables category on the balance sheet, which means that it's effectively a bit of a hidden debt. And that may lead to problems because it very often attracts companies that use this supply chain financing that have already a bit too much debt. And they're actually taking on more debt, in this case to play suppliers, but it doesn't show up as debt on the balance sheet. So there's a bit of background on why people use it and why it's actually grown very quickly and very large.
Interesting. And so, in essence, that's obviously always tricky, right? Is debt that is not recognized by debt because you get surprised. I think we've seen companies like MSC Healthcare where this was the case, and those companies were much more indebted than actually people thought, and also in a different way than people thought. So it seems on the one hand it's really necessary to keep sort of capex going, to have working capital, sorry, not capex. But on the other hand, it's obviously hidden. Now let's take a step on the side. Greensill, can you explain slightly what Greensill is and what their role is in this whole thing?
Sure. So Lex Greensill was a banker, an Australian by birth, who came to London, and he was doing financing, factoring, and reverse factoring at a couple of banks. So he saw a big opportunity to do this independently with an independent fintech branded platform, and that grew very large. So they are in a way almost like a broker. They arrange transactions where, on the one hand, they find clients, companies that like to use this reverse factoring, thereby, I guess, replacing payables with a debt, which helps their own balance sheet. On the other side, they fund this, right? Greensill does. And as you mentioned earlier, Bert, they have essentially two very large sources of funding. One is this German bank that they own, which has about 4.5 billion of assets. And the other one is Credit Suisse funds. And the way that works is that these fundings are very liquid, at least on paper. So Credit Suisse clients, which ranges from high net worths to insurance companies, pension funds, they take effectively a yield of between called 150 and 300 basis points. So a low yield, but in an environment which is zero negative yield, it's actually not bad for very short-term financing. So it has effectively daily liquidity for called 200 basis point spread. And how is that possible? The way it's structured is that Greensill will supply this financing on payables, and it will immediately put that in an SPV and sell notes of this SPV to, in this case, Credit Suisse, or in the other case, that German bank. So Credit Suisse is a constant buyer of notes which have as collateral these debts that it's owed. And on the back of that, there's credit insurance. So a large insurance company will insure against defaults up to a certain level. There's a first loss, the first risk goes to Greensill, but after that, the insurance company will cover this. And that's how this whole thing started spiraling out of control, because last summer, a very large insurance company, Tokio Marine from Japan, that had been insuring 4.5 billion of his credit exposure across, I think, the Credit Suisse funds and the bank, had indicated that they were going to pool that insurance, that it would lapse on March 1st. So Greensill always thought that they would be able to replace that credit insurance and worked very hard on that, but they failed. And March 1st, that actual insurance lapsed. So the Credit Suisse exposure had no credit insurance behind it, which made it obviously much more risky. Therefore, as a result, as per that prospectus of the Credit Suisse funds, Credit Suisse then pulled the whole program. Said, look, we're not going to buy any of the notes anymore. We're pulling the program, and we're suspending redemption, so no one can actually pull their money out. And that sort of was the start of the spiral, which has been a very intense week, with subsequently, as you mentioned, Bert's Greensill filing for insolvency.
Now, that's of course fascinating and very bad at the same time. So obviously, it's not the same risk as if you have a credit insurance than when the credit insurance expires. So, Credit Suisse, can you share 2 words on that? On these funds, investors, what's their role here?
Sure. So this 10 billion was across 4 funds that were all buying these notes exclusively. Reportedly, it is about 1,000 investors all across. So on average, 10 million. So this again are either high net worth or institutional investors. And basically they had no other option than to pool the funds, with the credit insurance being gone. And the big question now is what the recovery is going to be on these funds, right? Because there's really 2 risks, right? If you have provided the supply chain financing, and this company that you've done this, your client, is very dependent on this, and then you say, look, you got to pay me back. There's no more rolling, because this is sort of kind of thing that the music sort of keeps going until it stops, right? Then either this company will have to find a replacement financing somewhere else. But supply chain financing is kind of niche. So it's like you can go to your high street bank and say, look, I need this, because effectively, again, you're asking someone to finance something you have to pay, which no one really wants to do. Or you say, look, I can pay, and then you're gonna have a default, and then the whole thing goes into spiral, right? And the company is in deep trouble. It will default. The fund, in this case, Credit Suisse, will have to try to get its recovery. It may end up in a court process, and that goes sort of very quickly.
Now that's really interesting. And then there's another player, right? So I read somewhere that 2/3 of the German sort of Greensill bank of its loan book is actually tied to one single person, name of Sanjiv Gupta. So there seems to be sort of a cross relationship with Sanjiv Gupta that pops up every time. I read they call him the Man of Steel. Can you talk us a little bit about Sanjiv?
Absolutely. So this is a at least on paper, a very successful businessman who built a steel empire, I should say, and it spreads 20 billion of revenues, 35,000 people working there, 200 manufacturing facilities in 12 countries. It's massive. It's called GFG, the group, I guess, finance group, and there's two issues. Well, more, but the main ones are, one, as you mentioned, call it 3 billion, an estimated 3 billion of Greensill exposure is to this group, which is by any stretch of the imagination bad risk management, right? The whole point of having this kind of exposure is this kind of business is that you take all these little bets, all these little loans. If one or two default, that's not a problem. It keeps going. But if you've got 3 billion to one counterparty, even though it's across the group in different sub entities, that's incredibly risky. And this is just me sort of thinking out loud. I suspect that the reason that Tokio Marine, as a credit insurer, pulled out may have had to do with this single counterparty risk. There's a number of other issues. There's certainly reports that the way that Mr. Gupta built his empire was effectively layer upon layer of leverage, essentially building a lot with nothing, and just having leverage, having the seller loans, shareholder loans, etc. And then also recently, a couple of journalists, I think, discovered that some of the security that Greensill had was actually on shares, which means that it may indicate that Greensill loans were being used to buy companies as opposed to just reverse factoring that we just described, which is obviously an even makes the situation even worse, because you get a classic asset liability mismatch. If you do short-term funding on short-term liabilities, that's absolutely that is what it is, but at least it's matched. But if you have short-term funding, Credit Suisse funds are basically one-day capital. It's overnight almost. But in the meantime, you buy an actual company with that loan. That's obviously a massive issue. So, and in the meantime, GFG has already announced that they will not honor any of the outstanding loans to Greensill. They'll stop paying them. So it's going to go. It's going to be very interesting what's going to play out, because not only is it a massive exposure for Greensill, it's also a business with a massive economic impact on the different towns where it's at, with 35,000 people. So it's very quickly becoming political. And that's probably the last thing also to say in the situation, is that it is very political. Lex Greensill had or has David Cameron on his board. David Cameron also has options in the Greensill business. Obviously former Prime Minister of the UK. At the same time, Gupta is an OBE, effectively a Sir in the UK. So he's had the right connections to be able to achieve that. So there's a lot playing here, which is also edging into the political arena.
So potentially it could be pretty dramatic from many angles, as you explained, Khing. If I haven't confused our listeners up to now, I'm going to do it right now. Softbank, right? With the Vision Fund, what's Softbank's role in all of this? Because they are also mentioned in all these Financial Times articles that we read about.
Yeah, this is one where there's many cross relationships, which are very difficult to understand. Gupta at some point, for instance, was a shareholder of Greensill, so it's one thing. Softbank in 2019 put $1.5 billion into Greensill at I think a $3 billion valuation. So it was clearly a massive deal for Lex Greensill. At the same time, they also invested in a Credit Suisse fund, which was then through Greensill giving loans to SoftBank-backed startups. So extremely circular, where SoftBank was doing everything. It was funding its own companies through Greensill, and it also owned part of Greensill. So that was confusing at best, but also it's very tricky typically. That $1.5 billion is considered gone because the company filed for insolvency. So it was a terrible investment for Credit Suisse. Apparently, a lot of it went to the German bank to shore up its capital ratios, but very unclear what Credit Suisse was thinking or what exactly the game was. But again, $1.5 billion, you've got to be. It's quite impressive in a negative way to be able to throw it down the water hose in only a couple of years' time.
So I'm not sure that this is meant what we mean by circular economy, but anyway, so there's many elements here, Khing, and I think, of course, the researchers on this will be starting, right? To start with the BaFin, the insolvency process in the UK. Investors of Credit Suisse funds are going to ask some really serious questions about their selection of the underlying transactions, right? Diversification was not respected, as always in finance world. That's your rule number one. So I guess this story is developing from here. We'll probably hear more about it. I just want to maybe so as you said before, GFG, known as I think Gupta Family Group or Gupta Finance Group. We're talking about cross relation here. There's another company called GFG. Just for our listeners, and that's actually the company of the brother of Lex Greensill, which is called the Greensill Farming Group. So just an interesting anecdote for our listeners as well. Thanks, Khing, for these insights. To be continued, I guess, right?
Yeah, absolutely. And I would say, just as you said, it's developing, and who knows next. I would say the last two things to keep an eye on is that Apollo, the big U.S. private equity group, has been rumored to be going to be the buyer of Greensill out of insolvency. And Apollo has a large insurance company called Athene. So in ideal world, Athene can step in on some of the credit insurance and be able to continue funding these companies, because this is going to have real impact on all these businesses that rely on supply chain financing from Greensill. So from a, I guess, societal perspective, that would actually be a good outcome, because again, otherwise they're just going to have their lines pulled, probably no way to replace it, and they're going to default on that. So that's Apollo, and who knows how that deal is going to look and if it's going to close, but that's certainly been on the headlines. And second thing is, as you mentioned as well, is BaFin actually has they put a person in the bank, in the Greensill bank in Germany. They have discovered what they classify as fraud, and from the board, and they've therefore notified the prosecutor, who's now investigating the German bank. So those are the most immediate things that are happening. And as you say, the other things are obviously what's going to happen to Credit Suisse, to its shareholders, everything around it. So Bert, thanks very much for hosting this together, and we will see how this story develops. Thank you.